Good morning and welcome this morning to Investing in Dividend Stocks. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend Scott Thompson, 20 plus year veteran in the financial markets. He is there to help facilitate and keep the conversation going and answer your questions. He is a great resource. As a matter of fact, he's a phenomenal instructor. He teaches the uh, webcast on Tuesday afternoon. Actually, I'm sorry, Wednesday afternoons, Stock Investing for Beginners, which is a great way to get started. If you've got people in your life or you're just getting started, it's always a great way to review some of those initial ideas and concepts around getting started investing. So, we're going to talk a little bit about income investing today, specifically around the idea of dividend stocks and around the idea of building a scan of where we can find perhaps some of these stocks that might meet certain characteristics. One of the things that notice the conversation that's going on there in the chat. One of the conversations that I have with traders on a fairly regular basis when I'm doing live events is the importance of trend. So we're going to talk a little bit about trend as it relates to dividend paying stocks today. And we'll build a scan that'll help to find that information. So that will be our focus. Let's get to a couple of quick housekeeping items, though, before we get started as we jump into this webcast. Remember that everything that we talk about is simply for illustrative and educational purposes only. It's not a recommendation. It is not any kind of advice or any kind of solicitation for a particular security or strategy or idea. Remember that there are risks associated with investing in dividend paying stocks, included but not limited to the risk that the stocks may reduce or stop paying dividends. Dividends can and do change. Now, we're going to focus on some areas where dividends haven't changed for a while, but remember, market conditions always are changeable. It's a dynamic environment. And so even a company that's paid dividends for 50 plus years could potentially change their dividend structure. Now, we're going to use some technical analysis in this discussion today. Not the only way to look at the market. It is theoretical in nature, but as same thing, so is fundamental analysis, so is probability analysis, so no guarantees as to what's going to happen. We're going to be using the Thinkorswim desktop software platform, specifically the paper money version of that platform. Now, I'm going to be using my demonstration account, specifically the live simulation side. Now, what I want to emphasize here is that there are some characteristics of the tools that we will use that do not work in paper money, that do work in a live account. So be aware as you move your practice from paper trading to live trading, there are differences. Some of the study tools that we will use in the scans today will not be available in a paper money platform. So just be aware of that, but we're going to demonstrate them so that you have the knowledge and ability to do that as you move to your live trading platform. Remember that investing involves risk, including the loss of principal. Past performance, no guarantee of future results. Of course, as we talk about all of these things, one of the things to consider, and one of the reasons why traders may use dividend stocks in their portfolios to provide diversification. Diversification does not ensure profit, does not protect against losses in declining markets. So, managing risk is certainly something that we want to pay attention to. So, I want to talk really quickly about where we are headed in this discussion. Just talk briefly for those of you that are brand new to this topic. I suspect, however, just looking at the makeup of the conversations that are going on out here in the chat so far, that many of you are already familiar with the idea of a dividend paying stock. But I think it's always a good idea to kind of step into a discussion like this with a good fundamental understanding. One of those is the fact that price appreciation is not the only reason why investors buy stocks. They may buy stocks to generate income in a portfolio through the use of dividends. If that company, if the stock pays dividends, dividend paying companies tend to be less volatile. Generally, they tend to be more mature. However, there are caveats to that. Dividends can change. They're generally paid through market ups and downs. However, that also can provide, especially if those dividend payouts are large, provide a little bit of volatility to stock price. So something to pay attention to. And it can potentially add dividend paying stocks, can add diversification to a growth or income portfolio. But these are some of the risks. Again, capital appreciation of dividend stocks is not guaranteed. You can find yourself in a situation where you buy a stock that pays a good dividend, but it is a downtrending stock, so that you're losing more in the capital appreciation than you are in the dividend payout. And that can be a challenging situation. You think, wow, it's got a great dividend income stream, but the price of the stock is going down. So that's something to pay attention to. Dividend payments can decline and can be discontinued. As we talked about, dividends can be impacted by rising inflation. Certainly a circumstance that we're kind of seeing now, if you think about energy prices, food prices, those types of things, housing prices being inflationary pressures. So let's jump over here to the Thinkorswim desktop software platform. And I want to show you a couple of things as we do that. I want to pop over here. We're on the scan tab at the moment. But one thing I wanted to show you really quickly is the Market Watch tab and the Visualize subtab. So we're going to begin this discussion with the idea of companies that have continued to increase their base annual dividend for at least 50 consecutive years. Now, there's a proper definition for that. There's a name for that. We call those dividend kings. So I'm going to pop over here to the Market Watch tab, and we're going to go to the Visualize subtab. And what I'm going to do in looking at this Visualize subtab really quickly, this is just a quick way to see a daily update. This is today's information of what's going on. Price movement. Stocks that have positive price movement on the day are green. The brighter the green, the more the price movement. The red stocks, those symbols, are seeing negative price movement on the day. The brighter the red, the bigger the negative movement. You see the nature of this visualization. So I'm going to go to our public watch lists here, and that's all public watch lists that we have. So you're seeing the entire pantheon, but you're seeing lots of repeats in here because we're looking at all of those public watch lists, and many stocks occur within several different watch lists. I'm going to make this side a little bit bigger so that we can see it. And I'm going to scroll down through this list. And the watch list that I'm going to pick up here is this one right here, 50+ year dividend. Now, as we talk through this, and I get that, Long Snapper, you're right. We're going to hopefully get to some nuances perhaps that maybe make this a little bit more effective. So we're going to look at the 50-year dividend. And when I look at this 50-year dividend, one of the things I notice is that there are quite a few less stocks in here. In fact, there are right now approximately 58 stocks in this 50+ year dividend. They're the dividend kings nature of stocks, right? So these dividend kings, however, the only characteristic that is required to be in this dividend king list is a streak of minimum 50 straight years of dividend hikes. So unlike dividend aristocrats, for instance, dividend kings don't need to be members of the S&P 500. So some of these are, in fact, mid-cap or small-cap stocks. And so they may have different volatility challenges, for instance. But one characteristic of many of these stocks is that they tend to have durable competitive advantages. They often have lower beta than the broad market. And again, so these are oftentimes heavily weighted towards those kind of mature industries. You see on here, Coca-Cola, Procter & Gamble, Johnson & Johnson. These are not necessarily newcomers to the list. Now, one notable thing to think about here in this particular case, if you look at the industries that these stocks in the dividend kings fall into, and that's the little kind of white label there, you notice we've got consumer staples, lots of consumer staples in those dividend kings. You notice healthcare, you notice industrials, a lot of industrials in this name. You notice materials, financials, consumer discretionary, a couple of consumer discretionary. You notice utilities. I will leave it to you to tell me what industry groups are not represented here in the dividend kings. What industry groups are not represented here in the dividend kings? There's one that's pretty glaring, actually two realistically that are pretty glaring. Three, if you think about what's been going on recently. Fine. Well, so we got some financials. We got a couple of financials there, Lakshmi. Yeah, there's some financials in there, but there are three primarily. Tech. Yeah, you got it, JV Texan. Uh, Technology. Both communication services and information technology are not represented at all in this current makeup of the Dividend Kings. But you know what else is noticing? I'm just noticing it here. There are no energy stocks. You got it, Timur. There are no energy stocks within this list of those Dividend Kings. So that tends to already kind of take out some of those high beta names, some of those names that are maybe a little bit more aggressive from a growth standpoint. So thinking about a composition of a portfolio, one of the reasons why traders, and you're right, real estate as well, one of the reasons why traders or investors may use this purpose, may use this scenario, is to provide that kind of different movement in a portfolio. If everything's piling into the Mag 7 or the Mag 10 or whatever it is, and you want something that moves a little bit differently, some traders and investors may look to these Dividend Kings, not just for the standpoint of providing that income stream from the dividends, but to provide that diversified movement. So let's think about this now for a second. And again, remember, these are gonna change. These names don't stay static. If the list is simply, if the characteristic is simply 50 straight years, some of these are going to go out, some of these are going to come back in. We're going to see some names that will fall back into this name. But going back to the premise of finding uptrending stocks, I know that there are some of the stocks in this list, even though the majority of them are green today, and that may be an indication that we have a risk-off day. I preach the gospel of uptrending stocks all the time, and if you've been in one of my live events, you know that that's the first thing that we talk about when we talk about technical analysis, is finding an uptrending stock. So within this pantheon of 50-plus year dividend stocks, the Dividend Kings, I want to find uptrending stocks so that I get the double dip, if you will, of price appreciation as well as income growth through dividend generation. So looking for good uptrending stocks in a good uptrending neighborhood here, the 50-year dividend neighborhood. So what I'm going to do, now that I've got that, and we know that our public watch list here is that 50-plus year dividend range, I'm going to come over to my scan tab, and I'm going to just reset this so that we can start with a fresh, clean sheet of paper here. I've built some of these scans before, but I want to kind of build through this and kind of think about where we are in building a scan that can find uptrending stocks with, and kind of the characteristic here that I want to get to ultimately, the goal, Dividend Kings that are in uptrends, that have maybe some rising momentum, they have good liquidity, and the dividend that they pay out, because one of the characteristics is it just has to be rising dividends. It can be a low payout. We want to have dividend relevance, and we want to put that dividend payout within a certain range. So we can do that as we go through this process and build this dividend scan. So the first thing that we're going to do to build this dividend scan is we're going to limit our universe, because if we were to scan right now, we're scanning in all stocks. And we want to limit our universe a little bit here in this context. So as we jump into this one here, we're going to first limit the universe in which we scan. So I'm going to just choose scan in. And this is where I have that opportunity. If I've built a personal watch list of Dividend Kings that I'm already interested in, I could limit it just to that list. But since I haven't yet, at least in this context, I'm going to come down here and I'm going to pick that public watch list that says 50-plus year dividends. So now what we've done is we've already narrowed down our universe from 2,000 stocks down to 51. So we could just run the search right here, and we'd have the same thing that we had. You'd see all the names in that watch list, the same stocks that we saw in that Market Watch tab. So I want to think about this as well, excuse me, in one other characteristic. Now, I'm just going to mention this, and so I'm going to put in a verbal disclosure here about this. If you're going to trade options, make sure that you're aware of the characteristics, risks, charges, and expenses of trading options. Make sure that you understand those characteristics before you consider any option strategy. But here's what some traders may do is they may simply intersect this list with a particular characteristic like weekly options, just so that they have listed options available for those particular stocks. So they might intersect this with all optionable in the event that a trader or an investor may want to use an option strategy. Now, I'm not talking about option strategies in this discussion. We're not going into that. I just wanted to provide that as a possibility in terms of filtering this list, because not all of them have listed options. So that's how we can kind of go through that list. That list. Now, one other thing that we might think about is an exclusion. And what we're doing then essentially in this context is we are drawing a Venn diagram, right? So the first part of our Venn diagram is 50 plus. Not 50 years old plus, but 50 years of dividend growth. And then the second Venn diagram circle that we might draw, we might exclude something out of that list. So we might say, okay, this might be our intersection with weekly options. It might be our intersection with the S&P 500. It might be our intersection with large cap stocks. And then whatever we have left is whatever is in the middle here. That's what we're going to find, right? So whatever our search methodology that we come to, that's what we're looking for in this particular case. And same thing. I mean, you can draw as complex a Venn diagram as you want with this filtering system, right? So that process. So Ignacio asks the question: is there a way to add a filter by Schwab ratings? So by those ratings, not necessarily specifically. However, I'll show you as we build this where you can find that information for the stocks within this watch list. So that is something that is more easily done on Schwab.com in the search tools and the pre-built search tools that are already there in Schwab.com. Less so here in the Thinkorswim platform. So what we might do is we might exclude something as well. You might exclude stocks that are, giving a particular characteristic or out of a particular watch list. If you've got a watch list that you don't want to include in that list, you can do an exclusion as well. So what we could do realistically here is do an intersection with the S&P 500 if we wanted to. But let's just go ahead and let's build through this list. So the first thing I'm going to do now that we've got our universe defined is I want to establish kind of a volume, if you will, threshold. Now, the idea behind that is I want stocks that have enough liquidity that it makes sense to have them in a watch list, because that makes it a little easier to negotiate buying and selling, right? They have a tighter bid-ask spread. There's less slippage. So we want liquid stocks. We want liquid underlyings. So one of the things that we might do is build a liquidity filter into this list. So what I'm going to do is I'm going to change this. I'm going to take this list out. I'm going to add a filter, and we're going to make this stock filter average volume. And I think if we come down here, we don't have average volume, average. So I think we have to do that as a study in this particular case. So what we're going to do, kill that one. Let's come down here and add a filter. And this is where we start to diverge once again from the paper money when studies won't work in that paper money. So we're going to come down here to average volume. And we're going to say the 50 period simple moving average of the volume is greater than a particular level, right? So I'm going to take a 50 period. We're going to take a little bit longer, maybe intermediate to long-term perspective. Yeah, and there you go. Scott's got it right there. Scott's got the structure there. So, all right. So what I'm going to do is 50 period moving or simple moving average of the volume is greater than 1 million shares, right? So the reason I use that 1 million shares as kind of that bottom threshold is that's where I generally want to see in terms of that bid-ask spread. It's not going to guarantee that I have a narrow bid-ask spread, but it's going to guarantee, I think, to a certain extent, that there is some level of activity that is greater than maybe a penny stock or a small cap stock. Now, there are small cap stocks that trade with 1 million shares average volume. I just have to check my zeros here to make sure I've got 1 million shares. And so if we were to use that, that's going to be our first filter in this list. So now that we've filtered for volume and liquidity, right, the next step that we're going to use is we're going to look for price moving in a particular direction. I want an uptrending stock. Now, there's a couple of different ways that we can approach this, right? I can approach this from the standpoint of the price of the stock being above a particular moving average. Now, we can do that, and we can come back again, and we can add a filter to this list, and we can add a study filter to this list, and I'm going to use a study filter. I've got crossovers. I could use, say, for instance, a moving average crossover filter. I can use, however, a study that might maybe make a little bit more sense, and that is a scan of where the price is relative to a particular moving average. So the one that I'm going to choose in this case is the moving average scan. So what I did is I added a study filter. I selected popular studies, and the one that I'm choosing is the moving average scan. So let me kind of scooch this down a little bit so that you can see it. Okay. So I'm going to look for a closing price is a particular range above a specified moving average. So in this particular case, I want to see price, a closing price that is, I'm going to bring this back down a little bit. I'm going to go within 2% above, and we're going to use that 50 period moving average again. 50 period moving average, simple moving average, that's fine. So now what we have is volume that's above its 50 period moving average, intermediate to long-term time frame. Price that is at least 2% above the 50 period moving average of price. So once again, we've got generally a stock that has or is stronger than its intermediate to long-term average. Now, that does not guarantee that the overall stock trend direction is in an uptrend, because it is possible to have a downtrending stock that is above its 50 period moving average if you're seeing a short-term turnaround or short-term breakout type move. Now, these don't tend to be very volatile stocks, so they don't see that very often. But at the same time, that is a circumstance that could potentially occur. So the next filter that I'm going to add in here is one that maybe I think gets overlooked somewhat. Now, I know people, technical analysts, tend to cast aspersions on linear regressions because it's simply curve fitting to what's going on. But in this particular case, we're going to use not the linear regression as a linear regression tool to define levels of support and resistance, but we're going to use linear regression and the angle of the slope. So we're going to take what has actually happened. So this is going to be clear, objective evidence that the slope of the linear regression line, which is best fitting to highs and lows, is moving higher. So it's like a moving average, but it's relative to the direction of movement of that linear regression slope. So I'm going to add another study filter here. Now, I'm going to caution you, the more study filters we start to add, the longer it may take for this scan to run, and the more opportunities we have for the scan to not work. This is not a guarantee by any means, nor is the set of results that we get a guarantee of any kind of particular characteristic. You may have anomalies that pop into this list. So now I'm going to go to study, and I'm going to choose a custom study, and I'm going to bring my study dialog box up here so that we can see it. And I'm going to edit this. And the study that I'm going to use, I'm going to just type in here. Let's go to study, and we'll look up the study, linear. So we're going to use linear regression slope. So remember, a linear regression channel or a linear regression line is just simply looking at what has happened and it's plotting kind of that mean reversion of that linear regression, right? So now what I'm going to do is I'm going to say I want the linear regression slope of a linear regression line of a period of 50. Again, we're going to go back to that intermediate to long-term time frame. And we're going to say I want a linear regression slope that is positive. So I want a linear regression slope, the direction. So if the slope is 0, it's a flat line horizontal. If the slope is negative, it's a downward slope. If the slope is positive, it is an upward sloping line. So that gives me an idea that over the course of the last 50 periods, this is an upward trend. So I'm going to choose a linear regression slope that is greater than 0. I'm just going to choose greater than 0. And so we're going to go back here. We're going to say, all right, let's do a greater than 0. So we'll make that positive, greater than 0. And I'm going to make this, I'm going to do this over 30 bars and see how that works. And we're going to click on save. And now we're going to click on OK. And now we've got that custom study linear regression slope length. Linear regression is greater than 0 within 30 bars. So it's an uptrending stock, theoretically, is what we're getting to at this point. Now, there's one other thing that we might put into this mix, and that is a dividend yield guardrail, if you want to think about it from that standpoint. And we want that dividend yield to be within a particular range, right? We want it to be within a particular characteristic. We don't want really low dividend yield. We don't want a really high dividend yield. So we could do an absolute here. We can add a filter, and we could add a fundamental filter here. And I think we've got, let's see, if we come back to this fundamentals, let's see if we got dividend yield right there. Current dividend yield. Now, this isn't going to give us a trend. We could do a dividend per share over trailing 12 months if we wanted to do something like that. But I'm going to do the current dividend yield. We could change that to a 5-year average. But I'm going to do current dividend yield, a minimum of 1 and a maximum of 7. And what that's going to do is it's going to put me in a range. So very unlikely that we're going to have a dividend king that has a dividend payout or a dividend yield that's greater than 7 or 8, because that would suggest that maybe there's special dividends paying out, or that there's some kind of growth metric that's causing them to pay out that high dividend. And high dividends tend not to last. Second is the idea that we don't want that dividend payout to be too low, because we want to stay out of those kind of lower priced, lower yield names for the sake of quality. All right. So now that we've got that in place, now that we've got that built, let's see what we get out of this list. So we're going to find 50. Let's see if we get any results out of this list. And this is actually really kind of interesting, because now as we get to this list, yeah, I like this. We get to those mac and cheese names, but Archer Daniels Midland, Target Corp, these are two of those names that are, I don't know that Target has a really especially competitive moat. Neither does Archer Daniels Midland necessarily. These probably have some inflation sensitivity to them, but I want to just kind of cross-check these characteristics. So let's take Target, for instance. And what I'm going to do is I'm going to go over here to the Charts tab, and I'm going to put this in my single grid so that we can play with this a little bit. I'm going to take implied volatility off that list so that we take that out, and then we'll just kind of play with this and see what we've got. So let's take Target as our example. So currently, we can kind of visually see that the stock is moving in a particular direction. So what I'm going to do is I'm going to add into this list some of those technical characteristics that we've been looking at. All right. So what I might do is go to my Erlenmeyer Flask icon up here. Let's add our volume average. So let's do volume average. Let's do volume average down here. We'll add that onto the study so that we can see it. And we can see that this has been tracking with a volume average of about 5 million shares. So we know that it's, at least from that characteristic, fairly liquid stock. We've got that volume characteristic taken care of. Let's take our moving average construct here. So let's take our simple moving average of 50 and turn that simple moving average on. So we're better than 2% above that simple moving average, that 50 period simple moving average. We can see that that's trending up as well. So we don't have that rare kind of anomaly circumstance where it's a downtrending stock. But now what I want to do is I want to add on here linear regression. So we can take a look at our linear regression slope. We can even put our linear regression trend line on here. And I'm going to put that linear regression trend line on this list. And we're just going to look at the trend direction. So there's our linear regression trend line. And so we can see that that's obviously moving in a positive direction. So we've got two companion pieces to this. We've got the scan that we've built, and we've got kind of the cross check if you wanted to build this study set into that list. So if I wanted to save this, let's do this. I'm going to save this grid as my Dividend Kings scan check is what I'll call it. Dividend Kings scan check, and I'm going to save this grid. Now what I'm going to do, now that I've got that grid, I'm going to take out some of these other ancillary ideas that I've got in this list, and I'll rescan this or resave this, and I'll send it to you. So I've got volume profile, we'll take that out, simple moving average, linear regression trend line, volume average, and we could take out some of these other studies that I've got in here. And now we'll click on OK, apply and OK. Now we've got that list. So you could use this tool, this chart grid, as a tool. So I'm going to do this. Let's save this as a study set. And we'll call this Div Kings Study Check. And we'll click on save. We'll save that as a study set. Now that's in our saved study sets. So there it is right there. Dividend Kings study check or study check. So simple moving average, linear regression trend line, volume average. That's going to be included in this grid. So I'm going to go ahead and share this grid with you and include those studies in that list. I'll put this out in the chat. Now, anytime we put anything out in the chat, anytime we share any item, remember it is not guaranteed as to time or accuracy. It is simply for illustrative and educational purposes only. So there's our companion piece to the scan. Now that we've got the scan, now that we know what that scan is, we can come back to this scan. And once we save this list, now we might be a little bit too filtered. There might be some tweaks that we could make to this, right? To that moving average scan. So one of the things that we might think about is this number right here, how far above the 50 period moving average we are, what we might be seeing in terms of what that filters. So we can change this list, these columns to display that. I'm going to tweak this a little bit, knowing that I've got that there. I'm going to move this down to 1% above the 50 period moving average. And let's rerun that scan and let's see if we get more. So the third that we get out of there, the one more that we get out of that list is Coca-Cola. And if we pop that again over here to our chart and let's go to KO, now we can see that we've got those same characteristics. Better than 1 million average volume. The linear regression trend line is moving up. 50 period moving average is moving up. Over time, it's kind of pulling back a little bit. But again, there's that filter for price being above this list. So yeah, it's a dividend class. Why isn't dividend a column? We can certainly do that. Let's go back over here to our scan and let's customize this. And we can put in here, we can look up dividend. Let's do our dividend yield, for instance. and we can put that in there as one of our columns. The reason I didn't put that in there, we can choose to do that. I'm going to remove this. I'm going to remove earnings per share. I'm going to remove high and low out of this list. And I'm going to keep all of these others in this list. And then we'll go ahead and we'll click on OK. And now we've got dividend yield there in that list. So we can do that, and we can sort that list by that column. So yeah, good question. And good example. The reason I didn't put it in there is because I wanted to show you how we can go ahead and add that column header into that list. So we can sort by that column header if we want to. So as we start to change this filter, as this filter starts to change, from a technical perspective, you can resort that list. We can sort by dividend yield, and you can see where those yields are generally falling in about that 2.6 to 4.2 range is our low and our high in this particular list. So now what I'm going to do is I'm going to come back up here, and we're going to save this scan query. And I'm going to bring this over here. We're going to call this Dividend Kings Technical Scan. Now that we've got that scan list, it is not yet, but it will be, Jim. I just built it. So we just built this right now today. And so now we've got that list in that scan. Yeah. So remember, as we put these tools together, sometimes the results are going to be different from your results versus mine. So there's our, okay, whoops. You see what happened when I changed that? I need to change my intersections here and make that our public watch list, 50-year dividends, and that's what can happen sometimes. Now we've got that list. Let's go ahead and save this scan query once again. All right, now we've got that saved. Now I'm going to go ahead and share this with you so that you've got this as well. And I'm going to go put it in the chat here. There you go. Yeah, so you might be pulling data from a different point in the day. There may be some other reason why, Zach, you're seeing that versus why I'm not seeing that. So that's why, and the reason that I gave you those two companion pieces, and again, neither one of those is guaranteed, but the reason that we have those two companion pieces, the scan and the chart tools, the study set that you can check against that, is so that you can run both of those and see which ones, meet both of those characteristics. Now, that being said, in terms of entering a trade, that becomes now, if we look at our results, ADM. ADM seems to be breaking out today. It's got an earnings announcement. It's meeting our characteristics, so we could go ahead and we could enter a trade on this one right now, knowing what it is, what it's doing, and knowing what that trend is. So I'm going to go ahead. I'm going to put this in my stocks group. And we're going to go ahead and send that order off. And now we're long 100 shares of ADM. Let's take a look at Target here. Target giving us at least a trade above the high of the low day here on a potential bounce. So we'll go ahead and we're still off of the close for the day, but we'll take that as a trade above the high of the low day. And I'll go ahead and put this in our stocks group as well, 100 shares of Target. So 2 trades on those. Again, and thank you, Scott, for reminding us that this scan uses studies which will only function in the live version of the Thinkorswim platform. So what I wanted to do really quick, show you 2 resources. I'm going to go to the Analyze tab, and we're going to go back over here to Fundamentals, and I'm going to take a look at, let's look at Target, for instance. Now on Target, as you look at these fundamentals, this is where you're going to see some of that fundamental information, but this is also where you're going to see some of those Schwab equity ratings pieces of information that you asked about earlier, where you will see that information. We'll take a look at ADM as well. and you can see where that falls. And then the other one was Coca-Cola, and you can see where that one is falling as well. So again, not a guarantee. Those are third party in many cases, providers of information. So beware of the information that those provide. All right. Last resource that I'm going to give you here is one that I think might be important and helpful for all of you. One of the things that we've got coming up, if you go to the schwab.com/coaching page and you go to live webcasts and virtual workshops, coming up tomorrow, if you scroll down through this list, is National Investing Day. And our National Investing Day webcasts that we are presenting tomorrow. So I just simply clicked on that National Investing Day list. I'm going to click on Learn More. And now I'm going to see the entire agenda of National Investing Day. So coming up first thing in the morning, Kevin Horner and James Boyd are going to be kicking the day off. Then we're going to have Wealth Management 101. That's going to be Joe Mazzola and Brian Olson. Then we're going to have Rachel Deshelle and Casey McCurdy talking about how to vet stocks for long-term investing. I'm going to be talking with Adam Lynch from our Schwab Center for Financial Research about this particular topic, creating an income stream with Dividend Kings. And then Brent Moores and Nathan Peterson are going to be talking about strategies for managing risk. And then finally, Michael Fairborn and Cooper Howard are going to be talking about retirement strategies for different life stages. So all we're going to ask you to do is come right back up here to that page, National Investing Day, click on register now, get registered for this event. It is at no cost to you. It is taught via the virtual environment, so you can watch that and attend anywhere that you are. You also have the opportunity to submit, when you click on register now, to submit questions. Scott nicely put the link out there in the chat, so you have that opportunity to register for this event. So we'd love to have you there with us for this particular event. Now, last thing, if you want to find more information about Dividend Kings, if you want to find more information about technical analysis, the great place to go is here at youtube.com @Trader Talks Webcasts. Click on that subscribe button when you get here if you haven't done so already. You can search through all of the resources that we have. This is our library at Alexandria of all of those resources that we have in the webcasts. And give us a follow on social media. I'm at Ben Watson CS. Scott is at Scott Thompson CS. We'd love to have you out there in the conversation with us as well. Guys, have a great day, everybody. And we will see you again very soon. In fact, tomorrow I'll be back up with that, doing that Dividend Kings webcast for Investor Day with Adam Lynch. We'll see you. My thanks again to Scott and our great production staff and our great reviewers. Have a great day. Take care. Bye-bye.